Hello, Warriors. Okay, let's say this to ourselves. I'm going to let the trades I'm looking for come to me. I'm going to let the market come to me this week. How you doing, Shahab? Brand, Michael Bergman. How you, Ryan?
Hey, Dale.
And Brand agrees. Just be patient and relax and have your plan and let your plan let the market come so you can execute it. Don't worry about missing it because you're going to miss trades every day. I don't know about you, but I do. And it's okay because there's always another bus around the corner, right? So you can relax and take the pressure off. So
Okay,
what lit up
you're
what lit
trying
up
it.
what lit up cable today?
Good bit of data, mate. Good
Okay.
bit of data from the PMIs. Bit of a theme coming from all the PMIs, really. Manufacturing still looks a bit weak in most countries, but services picked up in
Okay.
nearly all the PMIs. For the UK, both of them went up, but a strong reading in the services number gave the pound a little jolt in the arm, as we say.
Yeah, really took euro pound back down to, levels it hasn't seen. So
Yeah,
what are you doing with this pairing now that we've had this type of down day here?
three guesses.
All right, you're out.
No, I've added some. I've bought
Oh,
some here at the big figure,
okay.
and I'm sitting offside in some cable shorts. I was thinking the dollar might, you lot in the US might pick up the dollar when you came back in, and you are against everything else but the pound.
Yeah, and that's 104 level. I know. That's who I talked to. It was Chris's number from uh, this guy I interview. Inks, Christopher Inks is a pretty good Elliottician. And 104, I asked him, well, what would change your mind about being bearish a dollar? And he said, over 104. So, so far it's been, kind of a weak bounce. And you don't have it in, like you're saying, that you have exceptions to it, and you have to
Yeah,
be selective. Aussie still looks weak. Still think there's a shot for 67, and Euro still looks weak, but I could see divergences building in this. Look at this. So, we're starting to diverge at new lows. I think even if we got another low, towards 105, we might still diverge.
yeah.
Um, I wanted to ask Stell if he's here or is his daughter isn't
I'm
feeling
here.
well.
I'm here. I'm here.
Okay, okay.
Hello.
How you doing, buddy?
I'm good. I have a bit of a cold as well, but all good. All good.
Okay, so I know that you had mentioned the low 21s prior to it arriving. Do anything there? Do you have levels underneath that are gonna be attractive to you?
I did not do anything there because it didn't hit it. I had 2105
Okay,
as a bid. I still have it there,
okay,
but for me, no change. Unfortunately, we're seeing yields creeping up, and so 389 getting towards 390 10 US. The dollar is also creeping up. So can't really be bullish at the moment because of this move. So I'm sitting there waiting for the price to come to my levels. So 2105 is one, and then really, realistically, somewhere between 18.5 and 1910, depending on a lot of things.
okay. All right.
I
So
think that's the most important chart to look at today, Dale. That 10-year
yields,
yield.
yeah.
Yeah, that
Well, it should
3.9.
make a new high. The 4 hour is confirming, but I was looking at this formation that we had. It looked like some people are calling it a head and shoulders, and we tagged it here, and it's actually taken out its objective. It was like 380. Um, but then, we tested Stell's breakout level on this. I kind of think we're getting close to this wave being completed, and that yields are actually going to drop again towards 360. And then the big move to over 4.5. So I think there's one reprieve in yields coming here over the next couple of weeks before we get to 4. Just a guess, and things reaching targets. So doesn't mean it can't just keep running. I do have one quiz before I bring the rest of the guys in. What kind of gap is this called? And I know there's been plenty of gaps here filled, gap here filled, mucho gaps filled. So I'm calling this a breakaway gap. What will make it a breakaway
I
gap?
want to know the definition of mucho gap.
Many gaps. Many gaps. How do you like? See, I know another Hispanic word, cerveza. Mucho cerveza after at VIX
Mañana.
50. Yeah. Anyway, what will make this a breakaway gap? Anyone know? Let me check the chat.
Yes, we'll have to hold the gap and keep moving higher, but it's too early
That's
to
right.
confirm.
Right. So, okay, so that's it. It cannot fill the gap.
Yes.
Okay, that's what would make it.
Then it's going to be a runaway gap.
Yeah. So, FX traders don't see a lot of gaps. So sometimes you have to look to other instruments to, there's all kinds. There's exhaustion, there's runaway. Anyway, I wouldn't short it here. Okay. Sometimes you ask yourself, well, would you be long or short this chart and cover it up? That doesn't look like something I would sell into.
There's also mind the gap, like they say on the London Tube. Oh my God, that's a bad joke. Sorry.
Oh, all right. And let's see what else to talk about. WTI, it's an I don't know for me. It was bearish here. I don't know. So you would think it'd be doing better with the Russian production cuts, but maybe it could make another run. Where are you guys on risk? We've had a pretty good decline. I know attendees are telling me that stocks are going up. I think it was in here. I said it feels like we could roll over, and we're approaching some pretty important support here. So I think it looks kind of lousy. A lot of people have 3,900 as a big area. I saw Katie Stockton does. Jim Welsh has 3,880 as a big area. I think we could go there and see what happens down there. So maybe that's what the gap in the VIX is about. And Kman, are you around today, buddy?
Hi.
Okay, so do you have some upside targets in US dollar yen? We're about to make new highs, take out the high from last week.
Yeah, there's a lot going on in the high 136s, low 137. So you got 200 DMA, 100 DMA, and the top of the daily cloud around there. So if we break up above the prior high, this could be a bit of a target. Not sure if the market wants to do it, or perhaps wants exactly to go there before Friday's UEDA hearings. But it's if you get better numbers, if there wouldn't be this UEDA uncertainty, what he's going to say, people are speculating plenty of things. I would be really long dollar yen because I think better data elsewhere. US 10s pulling higher, and it looks to me like we are going to give it a good attempt to go and see a higher one. I'm a little long euro yen. I'm scalping sometimes a little bit of dollar yen, but it's very, very fast and not so furious. Okay. So for the time being, but I am positively oriented. That is negative yen as a currency.
Right.
But I don't think UEDA is going to really rock the boat. So there may be a bit of disappointment there, and the yen weakens a bit on Friday as well. depending on the data elsewhere, of course.
Technically, if you called this an ascending triangle, you know, it's got about from the lows of 27 to 33 is 6. It would measure
38.
39.
Yeah, 39. Yeah, there's
39-ish.
some stuff going on around 39s as well. But
Yeah.
I think first of all we have to break above those high 136s.
Yeah, look at there's a 200-day.
Yeah, I mean there's a bit of confluence down there. If it would be only the 200 DMA, look historically what the 200 DMA has done in dollar yen, that is absolutely nothing.
Okay. All right. So everything coming down to yields again.
Yeah.
And we'll see what happens. Copper still holding together after trying to break down. I guess it was a great breakout test that's holding. So it looked ugly down here, but it was a buying. It turned out to be a buying opportunity. I think that's about it. I really do think that the dollar, I don't know. I'm just not impressed by the bounce so far, and not being able to get over 104. So we'll see. If yields do peak and start to come down, I don't think that's going to be real positive for the dollar. So,
and we do have the possibility of making yields move this week with well, today's the PMI already, and then later in the week well, GDP revisions, but that's going to be old news now. But the PCE and stuff. So US yields could be on the way indeed again this week.
Okay, how high? 4? I mean,
yeah, 4% is going to be psychological, but then if you push above 390, which is a bit of a level also in the past, yeah, right 4 here will be a bit psychological there. Reassess perhaps.
So you're looking for new highs in yields now? Sounds like you are.
New highs above 430. I'm not 100% sure, but if the data continue to go the way they are, that is that less bad than the market was really expecting in 2023, at least the start of it. Yeah, then I can see it go back to 4.25. Yeah.
Okay, Steve, you thought that the market would have a hard time getting much past where we are right now. You still feel that way?
Wait a second. Which market are we talking about at the moment?
10-year yields. You thought they'd have a hard time.
Oh, no, I thought this is the first area of resistance at 390. So, yeah, we seem to be stalling here, but I do think there is a very good likelihood that eventually we're going past.
Okay.
390.
So your view changed after the action the last week or so? Because I do remember, I think it was you that said that, you know, you didn't really see how yields could make much more progress over 390. So, I mean, here we are. Now it looks better to you.
It looked better to me. I was talking about short term. We need some type of a pullback, but I do think that, you know, there is a decent potential for more upside from here.
Yeah.
Definitely, it wasn't easy to push below 340. I mean, I said that multiple times when we were down there. The market was running ahead of itself by a lot, and yields were completely underpriced there. Now, in the short term, we might still see this 390 hold a little bit, but I think the Fed can keep moving higher than people expect. I think we might even surpass 5.5% rates before we find a high. Perhaps we go 5.75 or something. So there is definitely the potential for more upside in yields, but we obviously first need to take a little bit of a breather here.
Okay. S&P's rolling over, or another shot to 4,300?
S&Ps are indeed rolling over, but technically speaking, there is no damage yet to the move higher. So, you know, I would still remain of the opinion that it's better trading FX these days than the S&P. S&P seems to be very resilient despite this recent pullback. We're currently testing a little bit of a bull flag that we've had the trend line support. So this is the first area of support we have exactly here. If we break through that, then we can look towards 39.75. 39.75 is going to be the key bull bear line area in essence for the index.
Okay, something that did happen, even though the metals are down again today, is it looks like the gold silver ratio has put in some type of high for now, which
It's definitely losing momentum. Yes. And the metals did produce some reversals, not anything super major on Friday, but some reversals indeed. But I think we need to see a lot more to be convinced that this was some kind of a significant turn in the market. For the time being, it's very likely that they're just going to be producing a little bit of a rebound. So I wouldn't read too much into it for the time being.
So perhaps this is A, and we get a B, and then we get a C.
I do think that the move lower is not impulsive, if that's what you're asking. And I do think that within the year, we're going to have metals performing really, really well. But it's very hard to say in advance when the uptrend is going to resume, right? That's a tricky question. We need to take it 1 week at a time. For the time being, we remain within the larger corrective pattern that we had in silver, which is very important. Gold had broken out of its equivalent one, but it was the only one. We kept pointing to that divergence. Gold was moving higher while the rest of the metal complex was not following. So I'll continue to take my cues off silver. I'm going to start trusting this, the upside in metals when silver and platinum break out from their long-term descending channels.
Okay. All right. Anyone want to talk about Canada? I don't blame you.
Do we have to?
You?
Well, we got retail sales and CPI coming out. So
yeah,
all eyes
baby.
on that as to whether the BOC are going to stay pausing or if the inflation's going to tick up a bit or not drop as much as expected like the US, and then maybe some of the market's going to start getting a bit more hawkish over them as well.
Okay.
Yeah, this is going to be a big one, guys. And good morning. Happy Tuesday.
Good morning.
Oh, yeah, it's today.
Yeah, matter of fact, while I'm here and just as I'm wrapping things up, I need to take my cat off right now. I just need to do that before the data comes out. So I picked some up yesterday actually. And when it was our President's Day holiday, and I just took it off. Not for much, but I was hoping we might get a little bit bigger jolt before then. So how you guys doing? What do you think is going to happen here, Dale? Has inflation peaked globally, or we still have some things to do?
It's going to take a decade.
A decade. All right. So that means do you think Canada and other countries are going to be showing some hot data?
Yeah, I forgot who I talked to, but they thought that Canada was going to have to take another look at pausing. That they may have to begin again.
It's a theme coming around from some of the central banks. The Scandies, looking a bit more hawkish. RBA minutes last night said that there was a 50 on the table.
Yeah, it's not over.
It ain't over. And you know, we've
I
had
think there
this
were 3
discussion
false starts in the 70s. So
Yeah, exactly. We do have the 70s example.
yeah.
That is very, very true. And I also find it interesting that there is like an overwhelming consensus that the inflation problem is now in the back mirror, right?
Oh,
yes,
yeah, well, you gotta talk to Stelios. You know, he's a deflationista. Huh, Stel?
I'm
no,
not. No,
I
no.
don't think that's the case with Stelios.
What I've said is that high prices are here to stay. They're going to be going higher, but the rate is going to drop. That's what I'm saying. Imagine something costs 100 euros and then the next year it costs 200. So it's 100% inflation. You know, it has to I'm obviously using an exaggerated example, but for inflation rate to stay the same, it has to increase by the same the next year, right? So especially given we had all these circumstances that combined brought inflation high, right? We had a lot of QE, money printing, you know, all that. And then we had Ukraine. So it was a double, triple, quadruple whammy. Everything went up quite dramatically. For this to continue on a year-on-year basis, a lot of things need to happen. I'm not saying that it can't happen, but I'm just saying the chances are that the inflation rate of change is going to drop. Having said that, it really should be going negative for us to be saying, yeah, we're maybe going back to normal.
Which
but
it
of
won't.
course, we're not going to see negative. Yeah.
Which
yeah,
it
well,
won't.
Sorry,
you know, just really quick, looking at the dollar Canadian, just you know, quick glance around. So here's the dollar CAD. You know, we pushed out of this channel. There's this descending channel. We broke out of it as the dollar index actually broke out. It was more of a dollar index thing, not just a dollar Canadian thing. Kman, I believe he's here. I heard him. He sounded very jolly this morning, Kman, by the way.
Am I?
You sounded it. You sounded
Am I not always?
You are actually, you're always, see, I always picture you talking and smiling at the same time. So, but Kman, he pointed this out last week, this descending trend line. And that really, you know, between that, the 127% extension of the last leg lower, that really stopped the dollar Canadian technically. So we all know right now that we have to get above 135.40 in order for this thing to really turn bullish. That means, you know, we'd have to see a pretty negative print. People would have to expect that the, you know, Canadian or the BOC was going to, indeed maybe cut rates in the future. But we'll see. I think today is going to be pretty important. And if we break back below this 132, I'm going to call it like 132.20 roughly, right around here. We start breaking below here. You should see some sell-off in the Canadian currency. So I think that's going to be a bit problematic technically because we'll be below a 38% retracement. So those are the levels that I think that I'm looking at. Well, I know that I'm looking at. You're looking at them too. They're on my screen. The 38% retracement was right there. But there's other crosses that are moving right now. I know you guys, especially you guys in the flow show, had been focused on like the Euro Canadian, the pound Canadian, anything that.
We lost you.
Did we lose Blake?
Yep.
Your microphone is off, Blake.
Blake?
Mayday.
Sorry, guys, can you hear me?
Yes, now we can.
Yeah.
Yeah, I don't know what I think I had a loss of internet there for a second. I'm not I heard you guys, but you guys couldn't hear me. Okay, going back to the what I was saying is with you guys during the flow show, you guys have focused a little bit on the Euro Canadian, pound Canadian. Anything that you see there that jumps out that we should be looking at?
Yeah, in the Euro CAD, it's really 140, the bigger levels, right? 144, 40.50 and 142.35, the prior low, but inside already 143.20, 144. The figure on the short term is going to be monitored, I think, just on the CPI. And on the dollar CAD, I also have a 134 in there. So I think that's this 134, 135 and a quarter really is the range for me on dollar CAD that I'm going to be monitoring. And we should see some moves because the CPI is a mover, right?
It is. It really is. I was just pulling up the Canadian yen, and this is an interesting one. As you know, Kman, you mentioned a little bit earlier, you're long some euro yen. It's trying to break higher. You got the sterling yen that's breaking higher this morning after the data this morning out of the UK. But check out the Canadian yen. We're at 161% extension. We've already been there. This is testing it again. And a break higher, I mean, we'll be facing the 38% retracement, which is right here. And then we got a little, we got a big breakdown point right around here. But you can see how the top side would really open up on a strong Canadian print. So I think that's something that everybody should be looking at if Canada's data is strong. If it's strong today, watch this Canadian yen. I heard your comments about the US dollar, Japanese yen a little bit earlier. Look, I've got all sorts of sell orders to sell the dollar yen on a move higher above 136. I know I talked about it during the week ahead video. There's the 200-day moving average, big 38% retracement. I'm just hoping that I get an opportunity to sell up here with confirmation week with the BOJ governor nominee. That's happening when? Thursday? Is it Thursday? Friday. Well, Friday in Japan, Thursday in North America.
Friday morning Japan is Ueda, and Friday afternoon his two deputy governors, nominated deputy governors. So we're going to have a bit of a Friday main dish.
Right. So if you have any yen exposure going into the end of the week, just keep that in mind. Like I said, I'm trying to sell up here. That's my goal. I don't know if I want to play the near term, yen weakness if we get it. I'm not sure if I want to play it. I know a couple of you guys are, but that's not my cup of tea right now. I'm looking to actually sell this on a rally. But today, you could get the Canadian yen that could actually get a nice boost up towards the breakdown point right here. Following a strong Canadian print. So let's keep that one in mind. All right, we've got just a couple of minutes before this data comes out. Any other last minute thoughts here? Dale, what do you think about equities?
I only have one word: VIX.
Yeah, VIX is gapping higher this morning. We posted that chart in the chat room this morning. We're gapping higher today. That's as you pointed out earlier, you were talking about earlier, it's a breakaway gap. If it builds, I think people that are trying to sell dollars right now really need to take a look at the dollar index. We're just consolidating gains, guys. We are outside of a broken channel. We're above the 618 retracement. We're just consolidating here. So, if stocks, if volatility starts to increase, equities, continue to break down. And let's say we get down below this 38% retracement. By the way, it's coming up. It's only about 10 points away on the S&P. We start breaking down a little bit in the S&P with a pickup in volatility. The dollar index is going to take off again. As I pointed out in the week ahead video, look, I think a lot of people are, looking to reload dollar longs lower. But how about if we just don't get a move lower? How about if the dollar index just continues to build on these gains? It's entirely possible with the backdrop that we're seeing with rates, with yields, with equities, with volatility. So that also begs the question: if we have strong Canadian data, and let's say the dollar Canadian, dips really, down towards let's say 134, which would be a 50% retracement. We dip down here. Should we be a buyer, on dollar dips? Anybody have any opinion there? We have just a minute, less than a minute. Well,
yeah, I think that could be a good trade.
Yeah, I mean, I think I might even try to pick that up myself. So here's we're going to pull up the data flash off of ForexAnalytix. Remember, this is included. This is going to give us that print soon as it comes out. A lot of times it ends up being faster than Bloomberg. Obviously, your analysis is here, but I'm going to go ahead and put it on the Canadian. I'm going to put it on a 15-minute chart, and we're going to watch that. How much time we got, Stelios? I know you're watching your clock.
5 seconds.
5 seconds. Here we go. Heads up. What do we get? What do we do?
Retail sales a little bit soft, ex autos.
It looks like it's
CPI is low.
It's low. It's low. Dollar
CPI
CAD's
0.2 lower than expected year on year. Core
Yeah.
CPI 0.5% lower than expected.
Wow. Wow. So we're getting a little spike up in the dollar CAD. Man, I shouldn't have taken mine off, but that's all right. We don't live in shoulda, coulda, woulda land, right, Dale?
That's what you tell your sons.
That's what I gotta tell people. Don't, I took the dollar Canadian long off, but don't get all upset about it. I'm just gonna go throw something as soon as I'm done here. But with that move in yields, or excuse me, moving the dollar CAD, it's given the dollar a little bit of a boost, but stocks look like they're supported at these levels. Well, guys, I think well, first of all, you have an interview with Jim, the vixologist. Is that,
No,
did I just say the mixologist?
Dana Lyons.
Is it Dana Lyons? Oh, why was vixologist? Why was he on my radar?
Oh, I just sent him I sent him a tweet. Maybe
you sent him a tweet. Maybe that was it. Maybe I saw something go across with him a couple of days ago. For some reason, I thought he was. Well, hey, Dale, I want to say have a great interview. I want to thank everybody for being here today.
Just
I think
before you go across, Blake, I've just popped a link in there. If for those who haven't seen it, our post on Nick of Jupiter, how we passed the Traders Funding Program assessment, and you've got your post coming out this weekend. And if people want to grab that, they can follow the second link, sign up for our newsletter, because that will be coming out exclusively on our weekly newsletter, which of course you can get all the weekly analysis from yourself, the week ahead video, and all the analysis we do for the weekend. So if you want that post first before everyone else, sign up on that link, subscribe to our newsletter.
Oh yeah, that's going to be a good way for you guys to be the first ones to watch that video that will be out this weekend. And yeah, my post will be out this weekend as well. So I hope you guys enjoy it, and I hope it really benefits those of you that are attempting to pass the assessment. We had 2 people at the end of last week pass and go live, which is great. It's always great to see people start to access larger amounts of money, so and trade our cash. So we're happy about that. Thank you guys for tuning in. Dale, I'm going to pass it over to you so you can hang out with Dana and get his views on the market. Make sure you all stick around for that interview. Steve, Stelios, Ryan, Kman, you guys, thanks for being here. And Coach, have a great interview.
Thank you, Blake.
Gracias. Adios.
Gracias.
Feel
Did you just say
better,
gracias?
still. And
said
thank you,
gracias.
team. Ryan,
All right.
Kman, thank you guys. And Dane, I'm trying to promote you right now. Do you see that? I'm trying to promote you to panelist, and then you have to, there you go. Welcome back, Dana.
Hey Dale, how you doing, buddy?
Good, man. Happy New Year, 21 days later.
Yes,
Great.
indeed. Happy New Year to you.
Great to have you. So why don't we start off with what a January effect, Dana, that we had one of the strongest Januaries I could remember.
Right.
Yeah, have we entered a new bull market?
Not according to our work and our cycle work and our technical work. We think we're still in a longer term bear market, mostly spurred by the growth stocks, the bubble that popped in the growth stocks.
Okay.
I'm trying to share my window here.
We got it. We have the Russell.
Oh, got you. All right. Yeah. So yeah, our view is that we're in a longer term bear market. Like I said, the bubble and growth stocks has popped. This one, I just happen to have this chart up a second ago. So this is the Russell 3000 growth to value ratio. And you can see it's kind of been rolling over for the last couple of years. The last time it rolled over in 2000, we saw growth stocks drop really into 2007. So we
Wow.
might be just a short way. We might be closer to the beginning than the end of this turn lower in, especially the growth space and
Yeah, so
the stuff
FANGs.
that really got overvaluated. So
FANGs,
looking at,
MAGA.
yeah, exactly.
Okay.
And we're big. We're fans of data, as you as you know, Dale, and just looking at all of the kind of what we call background indicators, the longer term indicators pertaining to investments and pertaining to capital flows, things like valuations, things like household investment, that type of thing. These all went to great excesses, really all-time records. And we're just seeing that those types of things come off, and we've seen historically when those things go to all-time highs or one extreme, they always correct to the other extreme, and we haven't seen that in a couple decades. So we're due for to see that, as the great Bob Farrell said. It's one of his 10 rules of investing. Markets that go to one extreme always correct to the other extreme. They don't go to the mean. So we've got a long way to go, I think, in the longer term. I
Yeah.
think the good news, I would say, is the other side of this equation, the value space did not really reach those excesses. So if you look at here are a couple of charts. This is the large cap pure value. All right, just
Okay.
went to all-time highs at the end of
Yeah.
January, early
Okay.
February. So RPV is the ticker symbol here. So even if we're in a longer term bear market, um, as we trend lower in the growth space, we could trend higher in the value space. When we hit those pockets where we have the waterfall declines and there's basically nowhere to hide, this stuff will all fall too. But in the interim, you could have, these things hit higher highs. Here's even the
Yeah.
small cap pure value, RZV, tested all-time highs or hit all-time highs. So
Yeah.
last one,
I have noticed even the Russell IWM is outperforming the other indexes. It's acting better on strong days and not giving up as much on down days. You've seen the same
right
thing there?
now, yeah, our main risk model is an intermediate term risk model. So what's the market doing over the next 2 to 6 months or so? And our stuff's still positive right now. So we think we're this dip that we've seen since January. We're trying to add some long exposure into this. Here's maybe our favorite chart, the mid cap pure value. We exploded to all-time highs, and you and I think have talked about it recently. Kind of the technicals, the chart trading doesn't work like it used to. You used to buy this breakout with two hands. Now
Yeah.
it's usually a temporary fake out, wait for it to pull back. We've hit that 23 retracement. If we get that 38 retracement, then we're buying
Yeah.
with both hands.
Yeah. Okay.
So
We're on
value
the red.
stuff looks good. Breadth
All right.
right now has pulled back. We've given up some of our some of the positive status in those breadth indicators, but it's still strong enough that the trend is higher. So we're adding long exposure into this pullback. But again, ultimately, we're setting up for probably another leg lower, at least in the growth area of the market.
Okay. And how about for the averages, Dana? Do you think that what comes first? A new high in S&Ps or taking out the October low?
Yeah, I'm not holding my breath for a new high in the S&P. We might approach it. It's in okay shape right now. But some of the major averages, I'm not holding my breath for new highs. So I'm looking at other areas like the value space. So when I'm buying the dips, I'm buying it in something that's more constructive. Another one that is better and more indicative of kind of the stronger breadth readings that we've seen, at least this year and somewhat since that low in October, is the equal weight S&P. So, well, the S&P never got up to that 61 retracement, which we like to look at. Here's the RSP, the equal weight index, got above that
Yeah.
61, hit that 778, just pulling back now. So RSP is something you can buy on the dip as well, down towards that 148, 149 level, I think. So it's like I said, more indicative of kind of the stronger breadth readings that we've seen of late. And breadth is one heavy factor in our risk model. We want to
Okay.
be,
Are
aligned
yields
with
part of
the quote unquote market.
Yeah, are yields part of the equation as being negative in the background? A lot of people had yields mispriced before the NFP a few weeks ago, and we put on 60 bips since then. Do you think that this also can be a problem for growth? You would think that higher rates are tougher on growth than value.
Absolutely. So we're at absolutely. So interest rates, we think the cycle, that 60-ish year cycle
Yeah.
bottomed in 2020, the COVID bottom, after, obviously
Right.
hit a high back in early 80s. So if you look at the long-term chart, we really rallied up to, and this is the level we're looking at, just about 4%, around the 415, 420 level. Hit that and stopped, obviously, late last year, coinciding with the bottom in equities. So pulled back to that initial support level around that 340 level that we're looking at, around that 23 retracement from that COVID low. Bounce there. So that's the big line in the sand right now, around that 340 level. So we bounced up. I'm not sure that the pullback is over and we're ready to explode higher. I'm happy to give the downside another chance. And if we do break that 340, maybe ultimately 280. But longer term, we are extremely bearish on bonds. Looking at if history is to be a guide, and it typically is, we're looking at several decades of rising yield. So that's kind of a daunting thought, obviously, for investors, for anyone trying to buy a home, obviously. But the cycle's pretty consistent.
Yeah, anyone who's been trading for 20 years, that would be a new paradigm completely. Everyone's still hoping and waiting for the Fed put to come back.
Yeah, absolutely. And the other thing is looking at, the you say a new paradigm, you consider what the quote unquote rules are of investing, especially like something like the 60-40 portfolio, which is, okay, bonds are a quote unquote conservative investment. So if you're getting older, this is not how I invest, how we invest, but the general rule on Wall Street, or in the financial planning arena, is the older you get, the more you move into bonds. And if we're in a 20-year, 30-year bear market in bonds, that's not going to necessarily work out too well. So we saw that last year, obviously, with one of, if not the worst year ever for that 60-40 portfolio. And again, that might just be the start. If we're in a bear market in stocks, and we're just starting a bear market in bonds, it's going to be a rough road, obviously, for the traditional, what is now a traditional investment philosophy, which was really only a philosophy of the new paradigm, or the old paradigm that we're leaving, as you mentioned. So
are you having more of your clients asking questions about alternative investing because of that?
Not really, because they trust us to kind of avoid the fads, so to speak. But we're the cryptos, we're open to trading them. We're not against anything that has a price history and gives us an opportunity. So we'll go where the opportunities are. Right now, we don't think nothing to us is a buy and hold ever. Not stocks, not bonds, not gold. We're going to be trading. Everything cycles. Nothing goes up or down in a straight line. So something like Bitcoin or the cryptos, we're happy to trade it if it's in an opportunistic period, which it might be right now in the short term. You've had Bitcoin and Ethereum take out some good levels. So another thing that you can buy on a dip right now. But again, am I going to subscribe to the theory that, okay, this is going to be the new currency, it's going to 100,000 or 1,000,000 or whatever, and we're just going to plan our money in? No, because even if that comes true, which I'm not saying it is, maybe it takes 2, 3, 5, 10 years for that to happen. And if my clients are losing money for most of that period, guess what? I'm not going to have any other clients around when that happens. So, you know, I think the main lesson is nothing is a buy and hold. Everything cycles and everything has its season. So we're happy to trade it. But
so what season are the miners in? They had their spring this winter. They were very good performers, and we've recently had a nice correction in gold and the miners and silver. Is this a break to buy, setting up in the miners in your view?
Yeah, we're buying the dip. Precious metals in general, we're pretty constructive on. Gold, so we trade, you know, ETFs. So our view is this is kind of a long cup and handle here. Here's GLD. Rallied up in 2020, roughly to that 2011 area, and we've been pretty much consolidating, storing up fuel for a potential breakout and another big up leg. If that happens, obviously, that's going to take the miners with it. The miners didn't quite follow along with the precious metals, with gold and silver and the metals, the commodities themselves. Here's the XAU. Kind of, we rallied up to basically the 61 retracement, right? And so that's been a natural barrier. So if you're looking at the XAU around that 160 level, GDX, I forget the corresponding level, but about the same general setup. So if we see a breakout in gold and silver, I suspect GDX and the miners will break out above these recent highs that we've seen over the last couple of years. We'll make a run at those 2010, 2011 highs for sure. So yes, we are buyers of the dip for sure.
Are you on the other side of energies? I mean, that was one of the most popular and best performing sectors last year. It seems like even with the Russians cutting production, that XLE really hasn't performed that greatly.
Yeah, and that's another thing. I think if you're looking from a longer term cycles perspective, that's one that was beaten down for so long, kind of like the value stocks. That maybe we're giving the benefit of the doubt that maybe that's the start of maybe a longer term move. We're just kind of consolidating that big move we had last year. One chart we like is the oil services, OIH, which has held up pretty well. You know, it's had a great year last year, kind of consolidating in here at multi-year highs. If we can hold up here, I think it can make a run. We are a little suspect of commodities in general, the CRB and oil in the near term. I think you can make one more lower low before bottoming. But commodities in general, we think we're longer term, we're bullish. So even if there's one more low to come, I think that's a dip that you buy, and energy stocks in general, I think should benefit in the longer term.
Okay, so you know, when you talk about the miners and commodities in general, are companies of those producers considered value stocks? You put them in value?
Well, I would right now, just because of, you know, you look at how they've traded over the last, you know, decade plus, years. You know, 20, a couple decades. Certainly at this point, they would represent the value. You know, they're certainly not in the same boat as growth, which you know, represented that bubble, that over evaluation that we saw. Obviously, contributed to that by central banks and the Fed put, like you mentioned. But ARK for example. I mean, that's your
Okay.
bubble. That's your
Yeah.
bubble. This is the energy stocks have been going down for, several decades, or at least a decade, and just emerging from that. So this
Right.
is your bubble that has popped, that I would not hold my breath for these growth stocks to come back in any sustainable fashion. So any rallies here, you'll like I said, you're going to have, even a long-term bear market, you're going to have your bear market rallies, but
Right.
those will be sold in growth, and something like the value, or something like some of the energy or commodities and the miners, things that have struggled for a little while now. Those are things you can buy on the dip, not necessarily that you're going to hold them for 10 years, at least not in our view. We don't like to take the 50% drawdowns along the way, but definitely you can. They got a shot at making higher highs, higher lows along the way.
Okay. The dollar has been a very important piece of the puzzle. I believe it's really the fulcrum of the wheel that all other markets revolve around. Are you in the camp that high at 114 was the high in the dollar, and any rally is just a bear market rally to fade dollar strength, or was that a break to buy and to be long dollars in this environment?
Yeah, it's well, the higher highs were important for sure. So right now we're still seeing a higher low versus obviously the
Yeah.
lows of a couple of years ago. Right now, like I mentioned, we operate more on an intermediate term time frame. So right now, this is in a bearish scenario for us. So we would be
Okay.
selling dollars, especially up towards 106.
Okay. Got it.
We are along a little bit from this 102-ish level, but 106 would be sellers. In some of the other currencies, we've been trading those ETFs as well, euro, yen, that have broken their downtrends for now.
Right.
If we could definitely be proven wrong, and
Yeah.
if we do, then we're going to bail on those. But right now, something like the yen would be buying the dips here. FXY down below 69 bucks. We'd be buying the dip. Something like the euro, same
Okay.
thing. So in the intermediate term, yeah, I think the trend is down in the dollar. We'd be selling rallies there, but again, longer term, it could be, setting up for another big move higher. Not sure, but euro FXY. Bought some here around that 98 level, down closer to 96.5. You buy some more.
Okay. I wanted to ask you, do you think that a weaker dollar helps value? Because value, you'll get nominal growth with a weaker dollar. It's not really growth, but a weaker dollar makes the price go up.
Yeah, it's definitely going to benefit some areas of the market. Our philosophy though is it's always judge the investment merits of each market on its own merits. Judge the opportunity, judge the attractiveness on its own merits. We don't try to get too much into the intermarket analysis, because some of those relationships change along the way. Even something like gold dollar, which is historically, the poster child for the intermarket analysis, it doesn't always hold true. So our thought is judge each investment on its own merit. It's hard enough to figure out where stocks are going, for example, without, trying to figure out where dollar's going and then base your stock investment off of the dollar. So once you start getting into derivatives and derivatives of derivatives, then it gets even more complicated. We try to keep it a little bit more simple than that.
Okay.
Well, again, then
let's simplify everything with one chart right now. Are you ready?
Yeah.
VIX.
I was just going to pick that up. That's funny.
Well,
we're on the same page here, Dale.
Okay.
So here's one thing that's been supportive of stocks. Since the low and fall, it's been depressed. As long as it has been, we've been pretty comfortable buying the dips. Today we're getting a little pop up over that 50-day average, opens up room maybe up into the mid 20s. So maybe there is a little bit more pullback here, and get investors a little bit more fearful, get us people like managers like us a little bit more skittish of buying the dips, and then pull back on the VIX, and then we get a nice little pop in equities. So the markets never make it easy on you, do they? So they're always going to make things nervous.
Yeah, if you look at today's action, there is a breakaway gap. If you put up like a 4-hour, it's gapping higher out of this formation. And if we don't go back and trade into Friday's close or Friday's high, that's a breakaway gap. So yeah, I see that 25. If we get through 25, we're talking low 30s,
Yeah, for sure. And well, if that is, we're comfortable with our model that we've been trading for several decades here. And what if we have moves, and we tell our clients all the time to ignore the noise, headlines, exogenous stuff. If that stuff is important to the movement of financial markets, it's going to feed into the data that we use in our models and that we think is important to investing. So if this type of a move is going to be legit, it's going to be something that kind of turns the tide in stocks, and it's going to feed into the data that we use. And again, a lot of that has to do with breadth, has to do with money flows and that type of thing. So if this is meaningful, it's going to impact the data in a meaningful way, and we can adjust. Right now, we haven't seen that yet, so we're still leaning bullish in the intermediate term. And again, if that changes, which eventually it will, then we change our investment posture.
Okay, always ready to change. Keep an open mind, keeps your account open. I just have one more question for you, buddy.
Yes, sir.
Would you like to ride in a beautiful balloon? Huh? Would you like to get an aerial?
Like that.
Would you like to get an aerial view of the market? And with all the balloons up there where you could kind of, get a real nice view. Anyway,
I mean, I don't know.
With
everything getting shot down, I don't know if I would.
All right. Well, anyway, I thought I'd invite you for a balloon ride, buddy. Anyway, Dana, great to talk to you. Have a great quarter. And the best way for people to follow you on Twitter is you want to give them your handle and show your website.
How do I find this?
So guys, if you need an active manager like Dana is, and you don't feel like a genius just sitting in SPYs anymore, or the old 60-40 method that was a failure last year, check Dana out.
Okay, like Dale mentioned, our main business is managing money. We also have some trading subscription sites. So lion's share, if you like to do it yourself, this is a good way to kind of follow what we're doing in our management practice. Lionsharepro.com. We got actually a sale going on right now, but we kind of give you a heads up every day of what we're looking at, and then throughout the day actually give you alerts of actually what we're buying.
I lived in that building. I lived in that building on the left-hand side of your
Marina
screen.
Towers.
Yeah, I lived. Yeah, I lived there when I went back. Yeah. Anyway, I felt like jumping from the balcony after a day on the floor, but yeah. So and
you
who
can
else
find
lived
me
there?
Here you go. You can find me. Who's that?
Bob Newhart lived there. And
my brother lived there for a while, maybe at the same time as you. I don't know.
Yeah. So Dana's a Chicago guy.
Yep.
They're ethical, unlike from other cities. And check them out.
I don't know if you would. I don't know if you would get that from me living in Chicago, but Yes,
Yeah.
we try to be ethical, unlike some of our
Yes, there are a lot of
other
barracudas out there.
people out here. Correct.
So I
Correct.
like Dana. I think you could trust him. Check him out. And thank you for your time today, Dana, and your flexibility, and watch that breakaway gap on the VIX. That's
You
all
got
I
it,
have to
buddy.
say. All
Always
right,
fun talking to you and all of your listeners. I appreciate it.
Yeah, and let me know if you want that balloon ride, okay?
All right, I'll be in touch
my
with you.
trading warrior brother, Dana Lyons, everybody. Thank you,
All
bro.
right, take care, Dale.
All right, everyone, you could join the team in 15 minutes on the Morning Edge. And we'll see everyone tomorrow. Don't just count your pips, count your blessings. Adios.